Yo, what is up traders? So today I'm going to do a quick video on the PFK Alpha set files dashboard. Now this is a dashboard that we've custom built for the VIP members. It's where I backtest the PFK Alpha Expert Advisor on a whole bunch of different assets, and I will upload the backtested results along with the set file of those results for anyone to use. And the reason why we have so many different set files for different assets is because we want to diversify the entry model for the PFK Alpha across a bunch of different users. So not everyone's trading the same strategy on the same prop firm, right? Even though we have randomization settings on the back end where it will delay your entry a little bit and adjust the lot sizing a little bit, it's still better that we have a variety of set files and assets that people can use across the board. So I get a lot of questions like, what's the best set file to use? And I'm just going to go through this dashboard like I would use it, and you can watch along and kind of follow what I do. So the very first thing to note here is we do have an installation guide. So if you're not sure how to install anything, we have this there. And we also have this channel in the Discord right here, PFK Alpha Resources, a couple tutorial videos on setup. So make sure you check that out if you have not yet, as we cover a couple important things, especially with the risk settings. Okay, that's pretty vital. So the very first thing that we can look at is we have all the symbols listed here. We have EUR all the way down to gold. I mean, I'm going to add more as time goes on, but these are some of the main ones that I like so far that I've found promising results on. So you can go through, see what assets you like. Gold's obviously the most popular. We have the most for gold. We have 15 set files just for gold. And then we can also see here that we have this tab that says duration, 3 month, 1 year, and 5 year. Now, what this is we have 3 month back tests, and this is for input set files that we've done a 3 month back test on. And the reason we do it just 3 month is because there's something called recency when we're doing back testing. And that's just going to give you settings that adapt very well to the current market conditions, right? But if we go to 1 year, this is a full 12-month cycle of backtest results. So it's going to be a little bit more robust, in my opinion. So in my opinion, the 3 month can be more aggressive. The 1 year can be a bit more robust. That's not to say, the 3 month is going to always perform better than the 1 year or vice versa. But it's just to give a nice variety of like, okay, should we go with current market conditions, or do you want to go with something that's done good over a 12-month cycle? So the choice is yours. There's no wrong answer. Either one is valid to use. Okay, so the first thing that we want to kind of look at, I'm on the 1 year here, is how aggressive the input file is. And the way we can tell is by looking at the average trades per day. So the lower the number, the less aggressive it's going to be, the more selective it's going to be with the market conditions. So as we can see, this has half, this is like 0.5 trades average per day. So if there was 100 trading days, it would find about 50 trades. Okay. But then we can see down here, this Leon here is 2 trades per day on average. So it's going to be a little bit more aggressive. And then the other thing we want to look at is the risk to reward we have listed here, which is 1-to-1. And back up here, this was a 1.5R. And you can see that London Bridge here is 1-to-2R. So I always like personally using 1.5 to 2R. The 1-to-1Rs can be better for funded accounts when you're hitting very low targets because they have a higher win rate naturally because they're 1-to-1. But if you're going for a challenge with like a 10% profit target or something like that, I actually like the 1-to-2. But just a full disclosure, if you go 1-to-2, naturally your losing streaks might be a little bit higher than if you ran something 1-to-1. So it's all about like what you can tolerate for risk, right? For me, this set file looks really nice, in my opinion. We have a good run in the recent market conditions, as you can see here. Nothing alarming in terms of overall drawdown. We have 8% drawdown, was the worst over a year, which is totally fine, considering the profit that it's made. Now, that's not necessarily going to reflect future results, but it gives us a good chance to set ourselves up for forward testing and what to expect. So if I like Leon here, then I would just download that set file. I'll just download Leon real quick And then I'll show you something. I'll go to the actual EA, we'll pull it up, and then we can load up Leon, right? So I'll load it up, and it's gonna auto-populate the input settings. Now, one thing you should definitely do is always set the risk per trade to whatever you want, right? You could go 2%, you could go, if you wanted to let the edge play out over a longer period of time, you go 0.5%. I mean, this is totally your call. This is what your goals are for the account. If you want it to pass super fast, you could try 2%. I wouldn't recommend going over 2%. You're probably going to get flagged for prop firms, but just make sure you set your maximum daily loss to whatever your daily drawdown is. So if you have a 100K account and it's 4%, then set it to like 3,500. Give yourselves a bit of a buffer from accidentally having slippage and hitting that 4% daily drawdown. I always like to use at least 0.5% buffer because you never know with these prop firms, right? So that's kind of what I look for in terms of overall risk, right? The main thing I'm worried about is the average trades per day and the risk reward. Now, the trading time's up to you. Like if you want to monitor it closely, pick something in the session that you're awake. We're going to be adding more in like London session. We have a few in Asian session. And then we have one in New York session. But for like US 500, we have a couple in New York session as well. And actually, Hank has been killing it this week. I think if we go to the Discord and VIP success, somebody hit this 7.5% like 4 days, right? That's not going to happen with everyone, but this guy just happened to run Hank at the right time. So that's pretty cool to see. And that's all automated. He didn't have to work for that profit whatsoever, which is 10 times better, trust me. Manually trading 7.5% can be just such a grind sometimes. So the only other thing we should talk about right now is break even. Now, I get a lot of questions like, should I use break even or not? What's the difference? This is totally up to you on your risk tolerance. You have to ask yourself, what bothers you more? When price comes down and when price goes into profit halfway and then reverses and hits your stop loss, or when price hits your break even, you close the trade and then it goes to your TP. For me personally, I hate missing a winning trade that I would have won. So I like to not use break even, but this will mitigate losses, but it also leaves potential wins on the table. So it's totally up to your risk tolerance once again. So if you ask yourself that question, which do you prefer? If you prefer to play it safer and have less losses, even though that might equal to less wins, then use the break-even feature. There's plenty of set files with break-even. As you can see, we can go to all. We can just scroll down. We have one here, 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 right? Lots. So yeah, to wrap it up, I won't keep you too long, but to wrap it up, I would say if you're trading a challenge, 1.5 to 2R risk reward, there's a couple with 3Rs. You can try that if you really want to get aggressive. 1.5 to 2R risk reward is really solid. If you're running a funded, 1-to-1 might be a better option. Take a look at those, like Vincent here. You could use that. Okay. So, using a 1-to-1 risk reward, and you set it to 1.5% risk, well, all you need is 2 wins in a row to hit 3% profit target, and then you can queue your account up for a payout. So that's a nice strategy that you could do as well. But yeah, I just want to elaborate that there's no wrong answers with what input that you choose. Sometimes it's just like, you're going to see people pick the right input and it's going to run super hot. And there's just no way to know which one's going to run super hot because we can't tell the future. Okay. All we can do is pick something within our risk tolerance. That's the best play. Pick something in your risk tolerance, and then the rest is up to the markets, period. Okay. And I would recommend just running one symbol per account, your prop firm count, just because you might run into margin issues or weird hedging issues that some prop firms might have, like if you ran gold and USD JPY at the same time and one went long, one went short, for example, and then it might use up all your margin as well. So I would just pick one and just run one at a time on a prop firm account. So I wouldn't be doing a whole bunch at a time because that's just going to get a little bit chaotic. So yeah, hopefully that helps, guys. And if you have any questions, let me know in the VIP chat. I'm always around. All right, peace.